A stock card is a platform that we specifically built to make research, detailed, fundamental research faster, and then detailed fundamental discovery faster and easier. How do I find good high yield ETFs? Because I want to see whether it's better to invest in them. Like, that's a really good question. It's an example of a perfect question you can ask stock card, and the stock card can help you do that. Under the tools, we have a stock screeners, ETF screeners, and earnings calendar. I'm gonna start from ETF screener. Obviously, there's a very easy way from any of these screeners to go to others. It's by default, it's this type of investment ETFs, but obviously you could just easily switch to stocks, right? But for now, we're talking about ETFs. So what we did, which is very unique about a stock card, is that we grouped the things that matter in selecting stocks or ETFs in an easy categories, right? For an ETF, you would want to choose an ETF that you don't pay really high fee, right? High cost. So immediately we have this category of cost and tax impact, because tax is also some sort of a cost, right? So cost and tax impact into one big group. We basically you could say, I want to really find ETFs that their expense ratio is low. And then I also want an ETF that is tax impact is low, because that's important, right? As an investor, you don't want to pay to an ETF that has really high turnover and then you have to pay for taxes. So that's an interesting one. We talked about the yield. Obviously, we have this category of dividend status and dividend affordability as a category, because a lot of times people would want to invest in ETFs that for yield, right? You could just choose something, this like generic scoring system that we give to ETFs that says it's a good fit for a dividend portfolio. You can also choose the yield, right? Because if it pays like 0 to 1 or even 1 to 3, it's not as exciting, like from a yield point of view, especially now that we have treasuries that pay us 5 for something 5. So you really want something a little bit bigger than that. So maybe we choose these two categories, 3 to 5 and 5 to 10. Generally, we need to be careful about that 10%, more than 10% yield, because it could be a very risky or very leveraged type of fund. There might be other things that you would be interested. You could add things around risk. So it would be always a good idea to choose a low risk or a moderate risk ETF, both on a qualitative and performance one. This is basically stuff like, is the ETF borrowing a lot of money in order to improve their performance? That's a risk for an ETF. Or if a fund manager takes a lot of risky actions, they have really high turnover, things like that. Those translate into a risk for an ETF, but you would want to avoid them, right? These are obviously very personal, and you can play around with these kind of things when you choose your ETF, but I'm just like selecting, let's apply this filter and see what do we get. This is actually a very big research, big results of almost 300 ETFs that met our criteria, which is always a good starting point, right? Because you want to kind of have a big universe and then gradually reduce it down by adding more filters to a universe of things that are interesting. I usually go back to when I'm doing my own ETF screening, I usually go back and add some general filters that matters to me. For example, as a general rule of thought, ETFs need about $30 to $40 million in asset under management to cover their cost of running their fund. So you don't want to get a very small fund that is still not covering its own cost, because they may run out of business, right? So you really don't want to deal with that. So I usually choose 50 plus, 100, 500. And I stop here, or maybe you even want to add 10 billion, but anything more than 10 billion is also the market index, right? It's like too big. You're better off just invest in an index as opposed to like $10 billion fund. I also add fund tenure. To me, that's very important, because I don't want to invest in something that's just been created last year, right? You want some history, because you're here for yield, and you're here for less risk. If you want to invest in something that's less than a year, maybe you want to invest in an IPO as opposed to an ETF, right? So to me, it's always good to add some tenure, like 5 to 10 or more than 10 years. You want history for the funds you're investing in. And so those are some of the basic ones that I always include in my own, because I think it just make logical sense. Now it's like cut it down by almost half, right? 178 ETF. So you can keep going back to add filters that make sense. For example, one of the things we can do is like we would remove 3 to 5 yield, because that's also still too low, right? Because that's about treasury. So maybe we remove this one, and then that's probably, yeah, you see, like cut it down to 48. Now it's getting a lot more manageable in terms of number of ETFs that you would want to add. Something interesting about a stock card is that this is my account. So if I go here and if I name this as high yield ETFs, and if I save it to my account, it will be saved to the left of the screen here for me, and it will be the same for you too. And it will be here for as long as you want it, unless you delete it. And every night when we run the engines and to get more data or new data, refresh the data, these all get refreshed. So tomorrow, this might become 42. The day after, it might become 50. So new ETFs may qualify for your criteria. So this is a good ongoing screener for you. The other thing you could do is you could download this list if you want to like share it with your financial advisor or friends. You're going to get feedback from them, things like that. So you could share or you could download it. And then another one is like you could get the URL. So I'm going to copy the URL here and put it in the chat box, and I'll send it to you after this demo so that you basically have this ETF screener that we created together in case you want to go back to research it.